Hello guys, good morning and welcome. This is Blue Pips and today we'll be talking on advanced market structure. We know the way the market moves. The market forms what we call higher highs and higher low for an uptrend, lower highs and lower low for a downtrend, and on a ranging market it forms bounces between support and resistance. So for an uptrend, which is a trending market, forms higher highs and higher low, and for a downtrend it forms lower highs and lower low. Then for a ranging market, it bounces between support and resistance. So those are the three main kinds of market. You can get another market which is a choppy market and it has no direction. So these are the three kinds of markets. Now, for an uptrend, after identifying the move, the first is get a move. Is it an uptrend? It is pointing up. Now, after getting the move, there is spot the highs and the lows. So this is a high, this is a low, you have another high, you have a low. So the market we're expecting this move to get up, it forms another high, then it gets back down, it forms a low, goes up, it forms another high. So generally that is how the market moves. So that is an uptrend. Now for a downtrend, we are expecting a downward move. So it's supposed to go down, forms a low, lower high, then it forms another lower low, lower high, lower low, and that is how the market continuously go. So those are the three main moves. You have an uptrend, you have a downtrend, you have a ranging market, and these three markets you can trade them. Now the chopping market does not have any direction, so if you trade it, you need to be extremely careful. I don't really trade chopping market. So chopping market is where we call what we call momentum gathering market. So that is the point that we gather the market gathers momentum, and that is the main point that we are supposed to trade after the break. So in essence, we trade the break of the choppy market and not the choppy market. So these are the three main moves in the market. Now, another move is you can have what we call equal highs and equal low. So if the market forms an uptrend, up, goes down, up, and it goes down, up, down, up, down. You know, they move from this point down to this level. This is what we call a ranging, or this is what I call a pullback or retracement. Now, the retracement, we buy after the retracement. So if it gets down to this point, we buy at this point, then it goes up. Now, the market will not continuously go like this, but the market will get to a certain level and it reverses. So the market will give a sign of reversal, and this sign is what we call equal highs or equal low. For an uptrend, it forms equal highs, then it goes back down. So you discover the distance or these highs here are equal, and that is what we call liquidity. So your liquidity is always getting around this point. So in essence, if you must trade this move, what do? You may have a sharp move up, it goes up, kicks out the liquidity, and finally it goes down. So that is how we trade it. And under chart pattern, this is what we call a double top. And for the double top, after the move, it goes down, then it goes down, it kicks out the liquidity that is resting here, and after that, then finally it goes down. That is smart money concept. So this is it for an uptrend. Now, for a downtrend, it leaves what we call equal lows. So if the market is down, it goes down, up, down, up, down, up. Then it gets down to this point, it forms equal low. So it goes back to this level, then it goes up. So this point here, this is what we call equal low. So you need to understand where the market will, how the market will behave, and where you are expecting reversal. Now that is for this move. Now reversals can be experienced in so many ways. So if you get maybe this highs, goes up high, there are times that it forms low, it goes back up, it forms equal low. That is the first condition. Then the second condition is it may form a lower low. So this is what may happen at times. Goes back up to this point, then before you see it, it goes down. So when it shows a kind of point down, then we know this is the exact point to get in. Now, this is how the market behaves, and let me show you guys something. If this move goes up, it goes up, goes down. Now, for me to know this move has to reverse, then I will wait for the break on this structure, and that is what we call the change of character level. And the change of character level is always at this point. So it gets back up to that point, there's a change of character, finally it goes down. And there are times that it gets up to an order block. If you can spot an order block here or a psychological level here, that gets up to this point before it finally it goes down. So that is how we trade it. Now, For the advanced trading or for the advanced market structure, if you move, because as a trader, you are supposed to know how to move from one time frame to another. We don't stick to a particular time frame, but we move from one time frame to another. Now, let's assume this is an uptrend on a 1 day chart. If this is a 1 day chart, now this is an uptrend, so this move is up and it forms a high. Now it gets back down and it forms a low, and most often it retests a level. So it retests this broken structure and there may be an OB here. Now if this move retests this structure, which means this is a retracement. So this, from this point down to this point, this is a retracement. From this point down to this point is a retracement. Now from this point, this is an impulsive move. So the impulsive move has no problem, but the problem is where retracement will end. So if you're working on the maybe the 1 day chart and you get this retracement here, then this retracement, remember, it will be a clear downtrend on the 5 minutes, the 15 minutes, the 1 hour chart. Very important. So if you get this retracement, and good retracement always gives 3, 4, 5 candles. Now if this is a retracement on the 1 day chart, meaning this retracement can have maybe 3 or 4 or 5 candles. Now let's assume the retracement has 5 candles. Let me just erase this. So if we assume the retracement at this level has 5 candles, now if you have the move, it goes up and it gets back down to this point, and now this retracement at this level has 5 candles. So these 5 candles will be a clear downtrend on the 1 day, on the 1 hour chart. So this is what you are expecting on the 1 hour chart. Now on the 1 hour chart, since this move is already here and we get this move, so just this pullback here on the 1 day chart will be equivalent to kind of move like this on the 15-minute chart and on the 1 hour chart, and this will be a clear downtrend. So in essence, this move will actually form a kind of downward move, so you can get your trend line and you trade the pullback. If you must trade pullback, then you trade pullbacks on the higher time frame, so you get a clear downtrend and you draw a trend line and you trade the pullback. Now where do you know the pullback will end? Since you are moving from higher time frame to lower time frame, you know at this point here, this is where we're expecting this reversal to occur, because this is a clear pullback on the higher time frame. So since we are expecting reversal to occur at this point, then if this move goes down, up, down, up, down, up, down, then there are two ways you can trade this move. Please understand these two ways. The first method is you can get in at this point if you are very confident, which means on the 1 day chart you can spot a trigger here, which may be a hammer or a bullish engulfing candle. I will spot that trigger, which is a hammer or a bullish engulfing candle, and this is how the market will always behave. You may spot a bullish engulfing candle like this, and after that, then maybe you have a buy, a sell candle here, and you have a bullish engulfing candle. After that, the next candle gets back to this point before it goes up. So if it's spot this trigger here, then the entry should be here. That is the first condition. Now, to be very sure and to be accurate, then I always wait for change of character level. It's very important. And for change of character level, since we already know this is the high, so this high must be broken, and this is what I should expect before I get in. This is advanced market structure. So this is what I am expecting. I wait for the move, it goes up. Now when it gets up, this structure here will be broken, so it breaks to this structure. And since I trade just GBP USD only, the way it comes back and retests this level, I spot an entry here, which is one of our trading setups. So I spot an entry here. There are about 6 confirmations that we get before we place a trade. So when I spot the entry here, fine, I get in at this point. And when I get in at this point, then my entry will be, or my exit level will be far. This will be the first entry exit. And since I know at this level, this move here, this is a pullback, and this upper part here, this part here will be the this point, and it will, this move will not form equal highs, but it will break. So the exit will be somewhere around here. So that is a first step. Now you can grab your Fibonacci retracement level and you get where the exit level will be, most often on the 78 level. So you get their expansion too. You just grab their fib-based expansion or extension, grab it from this point up to this level, they pull it down to this level. When you pull it down, you get the level. So their pullback or their impulsive move may end at this level. When it ends at this level, then we are expecting the next correction. So that is the essence of multiple time frame analysis. That is the essence of understanding market structure. If you understand market structure, then you'll be the accuracy will increase. Now, there are just two things we trade. First is market structure, and the second thing is entry trigger, and that is what people call strategy. If you don't understand market structure, no matter how good the strategy is, you may never make profit. It's really important to understand this. So that is it, and that is how you have to identify or how you have to trade the market. Now let me just get to the chart and we try to explain this. Now on this chart, this is a 4 hours chart, and on this 4 hours chart, what do you see? The first thing you spot here is an uptrend, clear uptrend. And since this is an uptrend, how do you confirm this is an uptrend? You confirm an uptrend with identifying higher highs and higher low. So this is a move, and at this point, because this was a low, this was a high on a downtrend, so we had a break here, and after the break, then it gives a trigger for a buy. And this is what I call change of character level. So after that, it went back, we tested this level, and it went up. Now when it went up at this level, then it went back down, up, down, up, down. So at this level, this is a high, this is a low, this is another high, this is a low, this is another high, this is a low, high, low, then this is high, and this is a low. So after identify all these, then we can draw a trend line on this, can get a trend line. And since this is a trend line on this, let me just try to get it. Yeah, I prefer this one. So since this is a trend line on this, now what are we expecting? I emphasize that this is a kind of uptrend. So if you get to the 1 week chart, we'll see maybe something. If you get to the 1 hour chart, we'll see something. Now let me just try to illustrate what I was struggling to explain. Now this is a main move up. Then this one, this is a pullback. This is a main move up. Let me just get. We try to get a good example. Okay, let me get this. Now, I'll just mark this level. Since this is already a pullback, then we can draw a trend line here. And this is what we call morning line. It's not actually trend line, but I call it morning line. Now, if you draw a trend line maybe at this point, then what do we expect? This is a trend line. So if you get to the 15-minute chart, then you see a clear structure here. And you wait for the break of that structure. As simple as that. So if you get to the 15-minute chart, you can get a trend line, and you know that trend line will actually reverse at a particular point on the 4 hours chart or on the 1 day chart. So that is the importance of multiple time frame analysis. Get to the higher time frame, then you get a direction. You know where pullback will end on the higher time frame. I can trade that pullback. Remember, most people, this is what they do. On maybe on the 1 day chart or on the 1 week chart, this is what they do. They just sit on the 4 hour chart, and when if they spot the move an uptrend, the buy goes up, the buy they sell, and when it gets down, pull back. After the pullback, they buy. After the pullback, they buy. After the pullback, they buy. They just keep buying, 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 and at the end, they lost trades. So it's really important to know where reversal occur. And if you know where reversal occur, then you trade that reversal, you make very, very good profit. Very good profit. So that is what we had today. This is Blue Pips and Advanced Market Structure. Wish you the best as you trade.